You're listening to NBR Radio. Upgrade to My NBR Radio with a smartphone-only subscription to NBR Online today for free and receive unlimited access to NBR Online on your smartphone until August 31st. Visit www.nbr.co.nz/free.
To the weather and money. According to International Monetary Fund research, major El Niño events, which typically create extreme weather conditions, immediately sap New Zealand's economic growth and put downward pressure on inflation. New Zealand's gross domestic production growth drops by 0.29% in the quarter immediately after an event, as droughts in part of the country and flooding in other places saps agricultural production, according to an IMF working paper by Paul Cashin, Kamir Mohadis and Mahdi Raisi. New Zealand's initial slowdown in economic growth is shared by Australia, Chile, Indonesia, India, Japan and South Africa, as the higher temperatures and droughts constrain the supply of rain-driven agricultural commodities and drive up food prices, sometimes triggering social unrest on nations reliant on importing food. The paper said unlike most other countries in the research, New Zealand also experiences disinflation of 0.61% after 4 quarters following the event, as the weather events increase the likelihood of recession, wage and price freezes and structural reforms, as well as the country's well-anchored inflation expectations with the Reserve Bank's target band of 1-3% average. New Zealand experienced drought conditions in some regions earlier this year, which were expected to eat into domestic dairy production, though those fears ended up being unfounded, with farmers now forecast to increase production from a year earlier. During the 2012-13 summer, the North Island's dairy hub, the Waikato, suffered its worst drought in 70 years, which the Treasury estimated knocked $1.5 billion out of gross domestic product in 2013. The IMF research covered the macroeconomic impact of El Niño shocks from 1979 to 2013 across 21 countries and regions, to assess the economic impacts of the adverse weather changes and the spillover effects on commodity prices and inflation. The paper said El Niño events drive up non-fuel commodity prices by 5.31% after 4 quarters, as lower production saps supply, and also leads to higher demand for coal and crude oil, as less electricity is generated from thermal power plants and hydro dams. Water demand for irrigation use also rises, which drives up energy prices further, and the researchers found crude oil prices sustain a statistically significant and positive change following an El Niño shock of almost 14% after 4 quarters. The paper's authors also recommend investment in irrigation, as well as building more efficient food value chains should be considered by policymakers in their long-term response to El Niño events. To those possible extortion attacks, at least 4 large businesses have been attacked in the past week by a ring of international extortionists. The ring attacks computer systems if its demands are not met. Internet watchdogs have been warning businesses to stay vigilant and not give in to the criminals' demands for Bitcoin after some large organisations were attacked in the past week. The New Zealand Internet Task Force says the criminals are targeting large, high-profile businesses with core operations involving online transactions such as financial service providers, payment gateways and gaming sites. However, NZITF Chairman Barry Brayley told NBR Radio there's no reason small organisations will not be targeted soon. It's not known where the attackers are based, but it appears to be one operation coordinating the threats worldwide. Mr. Brayley says the unusual thing about the attacks is they appear to be from one group based on the text and email addresses used. It's rare to see a group systematically do this in a sector-by-sector way. The extortionists send an initial email demanding 25 Bitcoin, about $8,000, pitching at a level they think is affordable to businesses to make them pay up and avoid the attack. Mr. Brayley says they obviously identified the price point in the market where they will be most successful. The criminals very thoughtfully provided advice and links as to where the businesses can get their Bitcoin. Mr. Brayley says they appear to be as helpful as they can, while still extorting and threatening you. To demonstrate the threat is credible, shortly after receiving the extortion email, the organisations are hit with a short denial-of-service attack lasting up to an hour. A further and more serious attack can follow if demands are not met. The attack ties up all the website's processing power, so legitimate customers cannot use the site, which means a financial impact on the business. For bigger organisations, the size of the attack is manageable, providing mitigating systems are in place. Mr. Brayley says the attackers aren't doing anything particularly new, and it's not a scary large attack that's going to bring down the whole world, but they definitely have the power to carry out the attack. It's not an idle threat, and this impacts businesses. The best way to deal with such a threat is to prepare in advance. Internal tech staff should be briefed, and internet and hosting providers should be asked what systems can be established to mitigate such an attack. Mr. Brayley says in the event of a threat or attack, internet and hosting providers are first port of call, and police should also be informed of the cybercrime, although police won't be able to wave a magic wand and fix it.
NBR Radio, Friday the 8th. I'm John Stewart. Kim.com's back in court, and Victoria Young has been covering this latest case. What's he in court for this time, Victoria?
Well, hi, John. Kim.com, the internet entrepreneur, returned to the High Court today over a US Federal District Court forfeiture ruling, which means that about $4 million of his money, plus 20 to 30 luxury motor vehicles, plus Mona.com's home, should be seized by the Crown. Now, when I say seized, it's more like the Crown already does have these assets, but what the forfeiture ruling means is that the Crown can own these assets. So, theoretically, once the Crown owns the assets, it can do what they want. So what this decision is following is an American decision over Mr. .com's assets.
So the Crown is pretty well in step with the American argument?
Yes, basically the Crown is saying, well, we need to register, is the process term for it. We need to register the foreign forfeiture orders so they can apply to New Zealand, because it wouldn't make sense if they were out of step with what the Americans are doing. What the Crown is saying in this case is that the Deputy Solicitor General, which has made the decision to advise the police to register the orders, made the right decision when he exercised his discretion.
So what are .com's lawyers saying?
Well, basically they came before court today saying that they want a judicial review of the Deputy Solicitor General, Brendan Horsey's decision to sort of get the forfeiture orders in motion. What they're saying, and I wasn't there for the full argument, but basically I understand what they're saying is that, well, the Crown can't actually prove yet, I guess, that these are the proceeds of a crime, and therefore they shouldn't be, they shouldn't fall into the Crown's hands, basically.
Victoria, thanks for that.
NBR Radio with the Property Press. It's out now to show you around.
NBR Radio, I'm John Stewart, and I'm joined by Hamish McNichol and Victoria Young for our weekly court report. Now, Hamish, the Financial Markets Authority is standing by its chief executive amid revelations he was previously a director of a company recently fined a record £13.3 million by the British regulator. What's the story there?
Basically, the FMA is saying that Rob Everett has no responsibility for the sanctions against Merrill Lynch International, which were imposed for failing to properly report tens of millions of client transactions that can be used for market surveillance and to monitor suspicious trading activity.
So Mr. Everett's linked to this?
Well, his previous 17-year employment with Merrill Lynch, which is now a unit of Bank America, has been widely reported since he was made FMA chief executive in late 2013. So he was the Europe Chief Operating Officer for 3 years up until 2012, and then General Counsel before that for 3 years. And he had also been involved in its legal department for 10 years before that. But Merrill Lynch International's annual reports show that Mr. Everett was actually specifically a director of this company, which has just been fined for the reporting failures from 2009 to 2012.
So what's Merrill Lynch done?
Basically, last month, the Financial Conduct Authority of Britain, which is the FMA's equivalent in Britain, has fined Merrill Lynch International £13.3 million, which is about 26.5 million New Zealand dollars, and it's its biggest fine ever for reporting failures. It incorrectly reported more than 35 million transactions and failed to even report a further 121,000 between 2007 and 2014. And this sort of reporting is crucial for surveillance of insider trading and market manipulation.
Now, Victoria, you've been covering an online banking case in the courts this week.
Yes, John. I've been covering the case between electrical switchboard manufacturer Distribution Control and the ANZ Bank. It started this week, and it basically follows distributions controls. They were victims of an online banking fraud by one of their employees, but after the employee was convicted of this fraud, it also went after ANZ, saying that the bank's systems were flawed.
But this isn't the first case of this sort.
No, it's not. So the lawyer involved in this case has brought 4 of these sorts of cases against different banks since 2010. They've all settled, but I guess a common feature of the cases is that whoever these people are that have been victims of fraud have made an allegation that because the banks don't cross-check the name and number of a payee in electronic transactions, it leaves the process open to fraud by company employees who would enter the correct name but a different account number, usually their own account or similar.
So what happened with the case this week?
Well, the case the trial started before Justice Matthew Muir in the High Court at Auckland, but it actually settled after the first day. So it was $30,000 in costs that Distribution Control had to pay ANZ. And I guess the effect of this settling mid-trial is that we'll never know what evidence Distribution Control had against the bank. And, the bank's obviously lauding this as a win, and they've said in a statement that businesses can help themselves reduce the chance of fraud by avoiding giving specific employees sole or unfettered authority to manage bank accounts and payments without recourse to internal checks.
Now, Hamish, the Rich List edition of Neighbours at War, tell us more.
Yeah, this actually happened last Friday, so I missed a court report last week. But basically, an NBR rich lister and his neighbour, who is a former rich lister, are heading to court armed with a pair of Queen's counsels over shared access to their respective multi-million-dollar properties.
So who's involved?
Current rich lister Cameron Gregory, who has an estimated worth of about $160 million. He was a co-founder of Metropolitan Glass, which listed last year. And in the past year, he's actually put a whole lot of properties on the market. The other person involved is Evan Christian, who was on the rich list in 2000 before dropping off in 2002. And he was the former chairman of share market darling and Eric Watson company Advantage Group.
So the dispute is over what?
Well, basically, last week was just the first call in this dispute between Gregory and EK Trust, which is owned by Evan Christian, and this was heard before Justice Paul Heath in the High Court at Auckland. These two entities own neighbouring North Shore homes valued at $3.75 million and $8.65 million respectively. Mr Gregory has filed an application to enforce or modify a right-of-way easement against Mr Christian's company, and the two properties share a driveway from the main road.
Now, last week's proceeding, what happened there?
Well, Mr Gregory's lawyer, Harry Wilkins, has asked Justice Heath for a day for a defended argument on the dispute, which seems like a long time, but that's what they're going to get. But he's asked for urgency on the hearing as well, because part of the application is for a mandatory order requiring a security gate to be closed at the top of the driveway. EK Trust's lawyer, David Chisholm, QC, however, is saying that there's likely to be some factual dispute which will require possible cross-examination. So Justice Heath has set aside the matter to be heard on the first date available after June 8.
Now, Victoria, the other big news in the legal industry is the appointment of the Crown warrants. What can you tell us about that?
Well, the Crown warrants, which is the responsibility for prosecuting crime within a particular area, the warrants for Auckland and the Manukau region were awarded late last week, and Brian Dickey for Meredith Connell has the Auckland City warrant, if you will, and Natalie Walker of Kay's Fletcher Walker has the Manukau one. So this process came about because the broader Auckland warrant, which Meredith Connell had held, Brian Dickey had held, the warrant goes with the person, not the firm. And
he's officially known as the Crown Solicitor, is that right?
Yes, that's right. So he is the new Crown Solicitor for Auckland. He was acting, so he's not unfamiliar with the role, but so those two take on these Crown warrants, which are worth about $10 million in business, I guess you could say.
So what's it mean for Kay's Fletcher Walker?
Well, this is quite a new firm. Ms. Walker is ex-Meredith Connell, but she started this up, I think it was about a year ago, and she's basically got to grow her staff from 4 people to 30, and they're going to open a new Manukau office. So, plenty of developments going there. I've got some more detail on this in the print edition.
Sure. So what does this mean for Meredith Connell?
Well, Brian Dickey came in for Ask Me Anything earlier this week, and he said that despite the fact that the split of the warrant is 60% Auckland, 40% Manukau, so essentially they're losing 40% of their work to Case Fletcher Walker, he said there won't be job losses. He's very positive about the split, and obviously it reaffirms, the Crown and the Attorney General's confidence in him. So, yeah.
So let's move on to our wall of shame. And who's that this week, Hamish?
There's a story last week about a burger joint down in Wellington called Eckham Burgers, and their owner, Mike Duffy, posted a customer's private complaint on his company's public Facebook page last week, which got quite a lot of reaction on social media. But basically now the Privacy Commissioner is saying that if it did receive a complaint, then it would investigate it. So he's got himself into a bit of a hot water here, but I've also heard from a few mates back in Wellington that he was actually incredibly busy after he went on this big rant. So done well for business, but he could potentially be in a bit of trouble if anyone decides to lay a complaint.
So be careful with those social media. That's the old story, isn't it? It's becoming an old story.
Well, I think in this case any publicity is good publicity, isn't it?
Yes, it looks like it, I must say, in this case. Victoria, Hamish, many thanks.
NBR. Need to hire? Try our online recruitment platform, www.nbrtalent.co.nz.
To court news. Just a week ago, a High Court judge ruled Kim.com could get some frozen bonds back for living expenses and legal costs. But a United States Federal District Court forfeiture ruling means that money plus millions worth of assets, including a house and luxury cars, could be owned by the Crown. The United States has forfeiture orders over about $4 million in bonds, which had been released to Mr. .com, as well as about 20 to 30 luxury motor vehicles, plus Mona.com's home, which is next to the .com mansion. That house is worth between $4 to $5 million, the High Court at Auckland heard today. The legal process for foreign forfeiture orders is that the Crown must register it before it comes into force. But Mr. .com's lawyers want a judicial review of the Deputy Solicitor General Brendan Horsley's decision to do so. At issue is who should have made the decision, which was assigned from Attorney General Chris Finlayson to the Deputy Solicitor General. Crown lawyer David Bolt has applied to strike out the claim and appeared before Justice Rebecca Ellis in the High Court at Auckland this morning. Mr. Bolt told the court the way that Mr. Horsley did not have unfettered discretion, but that there were limited grounds on which Mr. Horsley could refuse registering the order. He said even the public interest was not a broad ground for refusal. Responding to queries from the judge, Mr. Bolt said the police and official assignee have made assurances that if they get to own the property, nothing will be sold, as Mr. .com appeals the forfeiture order ruling. He says if the forfeiture order is not enforced in New Zealand, if any money makes it back to Mr. .com's American lawyers, it could still be taken by the United States because New Zealand courts can't control them. Mr. .com is being represented by Ron Mansfield, while Mr. .com's co-accused Matthias Ortman and Bram van der Kolk are being represented by lawyer Grant Illingworth QC. The hearing is expected to take 1 day. Meanwhile, Justice Sarah Katz ruled earlier this month Mr. .com and his co-accused will face an extradition hearing at a date no earlier than September 1 this year. The German giant and internet entrepreneur is also involved in Employment Relations Authority proceedings brought against him and Mrs. .com by former employees. Mr. .com's civil suit against the GCSB and police, in which he has claimed millions for the illegal raid on his home, has stalled. A police spokeswoman has told NBR Radio that the police have applied for security for costs in that matter. In business news, NZF Group, the former financial services company, has entered voluntary administration after its second reverse listing proposal fell through. Last month, the Auckland-based finance company said it would look to find a way to return funds to its note holders in a timely and cost-effective manner, after plans for its listed shell to be used by Inventory Technologies in a reverse listing fell through. It said in a statement, NZF is now appointing administrators to expedite a timely distribution of funds to the holders of NZF Capital notes. NZF has some 18 million in notes listed on the NZX's debt market and carry an annual interest of 6% and last traded in June 2013 for a yield of 260%. The notes are priced at $21.353 for every $100. NZF shares last traded at 1 cent, valuing the company at $1.1 million. Both notes and shares have been suspended since April last year. The board first suggested liquidation in April last year when restructuring plans aimed at returning the company to profitability fell over after auditor RSM Prince resigned, a day after NZF was forced to restate its first half results for a second time. The move was blocked by Nessuk Custodians, which according to NZF's annual report holds 15.8% of NZF's $18 million in capital notes as it tried to find more value in the business. Since then, NZF has had 2 failed attempts at reverse listing.
NBR Radio, Friday the 8th. I'm John Stewart. The Warehouse has reported its third quarter sales. Jenny Ruth has been taking a look and she joins me now. Jenny, what did we learn from the latest report?
Well, sales-wise, the company's key Red Sheds chain had a pretty good quarter. They had a 3.8% increase in sales. And the Chief Executive, Mark Powell, says gross profit margins improved as well. Unlike Briscoe Group, he isn't complaining about the late start to the winter. He says some categories which are sensitive to the weather, particularly apparel, actually lifted sales above the average. However, he's still maintaining the company's pretty dismal annual profit guidance. The company's expecting to post a bottom line between $52 and $56 million for the full year, and that's down from $77.8 million last year.
So apart from the Red Sheds, how did the rest of the group fare?
They did pretty well. Warehouse Stationery, Noel Leeming and Torpedo 7 all lifted their sales, although the Noel Leeming sales increase through stores open at least 12 months was only it was less than 1%. Mr Powell says the trading environment for appliances stores like Noel Leeming's is particularly tough at the moment. However, with the 95 Red Shed stores producing the bulk of the company's profits, in the first half they accounted for nearly 93% of retail operating profit. Clearly the focus is on those key stores.
So how did the market take the result?
Investors were mildly encouraged. The shares rose 3 cents to $2.77 this morning, but you've got to keep in mind that they're down nearly 20% on a year ago, and by comparison Briscoe shares have risen nearly 15% over the same period.
So overall, would you say that the retail sector is actually having a bit of a tough time at the moment?
It definitely is, and the Red Sheds are a clear example of that.
Jenny, many thanks.
NBR. With a National Business Review smartphone subscription, you can read or listen to the latest from NBR online. And for a limited time, it's free. Join NBR's Intelligent Business Network today and get free smartphone access to NBR online until August 31st. NBR doesn't do sport, weather or horoscopes, just timely, relevant, useful and insightful business news. So for business news you can use for free, visit nbr.co.nz/free.
Exit polls are showing the British election is looking like a win for the Conservatives. This is a surprise after the polls over the weeks have shown the prospect of a hung parliament with Labour and the Conservatives neck and neck. In his editor's insight on Friday, Neville Gibson explains why the result is not what was expected. Neville, can you describe this as an upset?
Well, it's not really an upset, but there's no doubt that the Conservatives have done much better than expected, and that'll be a huge relief to those who believe governments should be rewarded for a good job on the economy. One of the problems the Conservatives and their junior coalition partners, the Liberal Democrats, had is that they actually tackled most of the economic problems. They'd reduced the budget deficit and some 2 million jobs have been added to the economy. But as with a lot of other Western economies, wages have not risen at the same time. There was a bit of a higher tax for a lot of income earners to reduce that deficit, and the government was quite unpopular. But obviously there's been a bit of a late surge in opinion. Maybe it was all the people predicting dire results if there was a hung parliament with no clear form of a way forward, but obviously that's happened. There'll still be a sprinkling of minor parties, but the first past the post system, they're only delivering a few of those.
Well, before the election, the polls were showing these minor parties had a third of popular support, and I presume you include UKIP there.
That's definitely right. Well, UKIP's got a couple of seats, the Greens have got a couple, but the big swing really has been in Scotland, where the minor parties, which they were to start with, have actually, the Scottish Nationalist Party has won all but one of the 59 seats in Scotland according to the exit polls. This has been at the expense of Labour, and really it just ruined Labour's chances of getting anywhere near a majority they need in the House of Commons. And the losses there, of course, the SNP's main aim was that we want to keep the Tories out, but of course that plan has completely backfired. In fact, Labour has had its worst election performance since 1987.
Will the Conservatives have a majority?
Well, not as things stand at the moment, and these are, as we say, exit polls, but they look to win 316 seats out of 650, with a possible majority made up from 10 that the Liberal Democrats could win. They've been severely reduced. In fact, the coalition government had 73 seats, but when you look at the maths, you really only need a majority in the House of Commons of 323, because the Sinn Féin members in Northern Ireland, they just refuse to go and take up their seats in London. So that gives them within, so the Tories are really within 6 or 7 seats of having a majority.
Well, in the wash-up from all this, will this mean Britain gets a less stable government?
Well, Mr Cameron, obviously, we won't probably know this until tomorrow, when the votes are all in and counted, he will either go ahead with a minority government, and we've had those on occasion in New Zealand, Australia and Canada, so completely workable, as long as you've got enough there not to tip you out in a no-confidence vote. He's done much better than expected, so you're only talking a handful of seats. So the coalition could be still on again, but that'll depend on them. What is more acceptable, I think, from the business point of view, is that they're going to have a government that won't be committed to some of the sweeping promises Labour was going to make. That was everything from higher spending, when they've been trying to reduce the deficit, and of course higher taxes on bankers and all kinds of people. So it looks like the prospects of Britain's economic recovery will continue, even if the government is a little bit less of a majority government, possibly a minority government, but at least the status quo is going to stand.
So I know it's early days, but has there been any response yet from the business community?
Well, they're holding back their comments on TV, although one minister's gone on BBC television saying it's a win to the Conservatives, and they're going to be staying in office. The financial markets have responded, not because they're open in London, but the pound has jumped to its highest level against the US dollar in a week, but financial markets are pretty erratic at the best of times in any kind of long-term thing. But that's all positive. One thing that won't be positive for business, though, is the promise of a referendum on the membership of the European Union. This is, of course, one of the prices the Conservatives had to pay to keep UKIP, the UK Independence Party, at heel, and a lot of Tory MPs have gone over to that party and they've taken a couple of seats, so they'll be still there in the House of Commons making noises. If that referendum's carried through and it's held in 2017, that'll be hugely destabilising to the business community. Interestingly enough, both Labour and the Scottish Nationalists are firmly pro-Europe and are opposed to that referendum.
Neville, thanks very much.
NBR Radio. With Hotel de Brett, your home away from home, but with better service. NBR Radio.
In court news, the lead offender in a magazine advertisement scam worth more than $750,000 has been sentenced to 4 years in jail. Anthony John Hendon, 54, appeared in the High Court at Wellington today after earlier pleading guilty to and being convicted of 24 charges brought by the Serious Fraud Office of reproducing documents with intent to cause loss. Justice Gillian Mallon sentenced Hendon to 4 years imprisonment. The crime carried a maximum 10-year prison sentence. Hendon was one of 6 people arrested following a joint enforcement agency operation established in May 2012, led by the SFO. The investigation, involving 7 different agencies and 67 staff, was labelled Operation Edit. Hendon played a lead role in the scam, successfully obtaining more than $750,000, according to the SFO. Overall, it attempted to obtain more than $1 million from about 1,000 victims. The scam involved grossly misrepresenting the number of magazines advertisements from prospective clients would be printed and distributed in. To encourage the advertisers to buy in, the magazines were titled in a way that suggested support of worthwhile causes such as road safety, parenting or family support. SFO Director Julie Reid says Hendon's sentencing represents another milestone in a very successful operation. Yesterday, 2 people were found guilty for their part in the scam, but no convictions have been entered yet. Noeline K. Banton, 61, and Johannes Hendrik Maria Middeldorp, 63, were found guilty of 7 charges of dishonestly reproducing documents and acquitted on 2 charges. They will appear for sentencing on June 12, at which point convictions will be entered. 2 other defendants were sentenced to home detention and community work respectively after pleading guilty. To business news, Bath Street Capital, which has been building up its local trustee business, has rejected a $22 million demand from Pine Gould Corp over its acquisition of Perpetual Trust, saying no price was fixed in the deal. The Auckland-based company said it's received a demand for $22 million plus interest and costs, which Pine Gould claims it's owed from the sale of Perpetual Trust in 2014. Bath Street said the agreement was for Pine Gould to be paid if the shares of a subsidiary company were listed on the stock market, something that hasn't happened. The company said the amount of the payment was not fixed and will be up to $22 million depending upon the price-earnings multiple at which a new company was listed. While Newco has continued to evaluate listing at some future date, there's no timetable for this event in the agreement with PGC. The purchase attracted the attention of the Financial Markets Authority after Guernsey-based Pine Gould recognised the $22 million gain in its 2014 annual earnings on the sale of Perpetual, despite the listing not occurring. Pine Gould has since said it will reclassify the amount as an available-for-sale financial asset in the company's first half accounts and would have the asset revalued by an independent valuer. Bath Street said it will robustly defend the matter and, if it goes to court, will require Pine Gould principal George Kerr and other associates of the firm to give evidence. The trustee firm has been expanding since its principal Andrew Barnes first agreed to buy Perpetual, adding Guardian Trust and more recently Covenant Trustee Services. Business news. Sea Dragon, which manufactures fish oil for health supplements, named Tetra Laval executive Colin Groves as chairman, replacing Doug Wilson, who announced his departure along with chief executive Ross Keeley this week. Groves is director of mergers and acquisitions at Sweden-based food processing and packaging group Tetra Laval, and in November was named chairman of MEA Mobile, the mobile app maker that counts Stephen Tyndall's K1W1 fund as its third biggest investor and is said to be mulling a public listing. Groves will join the Sea Dragon board in June. Wilson resigned this week, saying he wanted to focus on other interests, including development of pharmaceuticals. Shares of Sea Dragon last traded at 1.6 cents, a low it last touched in September 2013 and has fallen 27% this year.
Join NBR's Intelligent Business Network today. www.nbr.co.nz/subscribe. NBR.
In taxation news, banks are not the only target of Inland Revenue's latest tax crackdown. Although banks have attracted most of the attention following the government's release yesterday of proposals to change the non-resident withholding tax rules, other multinationals such as Microsoft and Coca-Cola, not to mention most of the country's insurance firms, will be caught by the crackdown. At present, offshore-owned firms have to pay non-resident withholding tax of 10% to the New Zealand government, but there is a suite of exemptions to this. What the IRD is now doing is closing down some of those exemptions, or at the very least putting more pressure on firms to justify why they should maintain those exemptions. Inland Revenue expects to reap nearly $50 million a year in extra revenue, but calculates between $12 to $15 million will come from banks. The banks are not keen. Bankers Association Chief Executive Kirk Hope says it will add to costs. He says New Zealand is an importer of capital. It's not a new thing. We've always been like that, and we will probably have to be for some time. So this is going to tax that more. It does mean extra costs. And any extra costs means potentially increasing lending costs for businesses and consumers. Deloitte New Zealand tax partner Patrick McHelman says the larger problem is it signals a shift in thinking at the IRD, and arrangements that were previously deemed all right with the tax authorities are now less so. He says they seem to run counter to changes made in 2011, which originated from the Capital Markets Task Force and which were aimed at helping New Zealand firms get access to capital. They also seem to be out of step with a number of our trading partners, Australia, UK and the US, which do provide exemptions from withholding tax in similar circumstances to ensure that tax does not act as a barrier or cost to capital flows. PwC tax partner Jeff Nightingale says there is also a shift in Inland Revenue's attitude to how much any extra tax will be passed on to borrowers. He says this is, in effect, a new tax on the bank's source of funding. The IRD, he says, has always operated under the assumption any extra taxation in this area would be passed on and would make debt more expensive. These proposals seem to have ditched that assumption. Inland Revenue Policy Advisor Casey Plunkett more or less acknowledges that shift in view. He said there certainly isn't a straight line between any increase in the amount the banks pay and interest rates. It depends on what's going on in the market at the time, and the Australian-owned banks will have to compete with Kiwibank and some of the smaller institutions, and they are not affected by this. He says the 12 to 15 million the IRD expects to gather from banks is not large in the context of those banks' operations, let alone their profit margins. He says there is not a big expectation they will pass that on to their customers. To America, a U.S. federal appeals court in New York ruled today that the National Security Agency, or NSA, program systematically collecting U.S. citizens' phone records is illegal. Despite being authorized by two presidents, both Republican and Democrat, and being ruled legal by the legislative, judicial and executive branches of the U.S. government, the NSA collection program remains under fire. The latest decision rules that the collective of metadata of phone calls to and from Americans is not authorized by Section 215 of the USA Patriot Act. A panel of 3 judges said the USA Patriot Act, which had been used to justify the data collection program, cannot be legally interpreted to support the program. The case was brought to the courts by the American Civil Liberties Union. A spokesman says the ruling should make clear once and for all that bulk collection of metadata is illegal. Judge Jared E. Lynch wrote on behalf of the unanimous decision, "We conclude that the District Court erred in ruling that Section 215 of the Patriot Act authorizes the telephone metadata collection program and instead hold that the telephone metadata program exceeds the scope of what Congress has authorized and therefore violates Section 215. Following the release of NSA documents by former technician Edward Snowden in 2013, revealing how and where the U.S. security agency spies on the internet, the NSA has faced numerous attempts from U.S. and foreign groups to limit its surveillance activity. The Patriot Act, formulated under the Republican President George W. Bush in response to the terror attacks of September 11, 2001, is due to expire in June this year. Congress has been debating over whether to extend the provision. The U.S. House of Representatives will vote on a bill next week that, if approved, could end the NSA metadata collection program. 2 similar cases reviewing the program are pending in separate appeals courts. And now a Solid Energy update. Reverberations from Solid Energy's 113 job losses at its Stockton mine continue to rock the West Coast and Christchurch. The reduction in coal volumes by 400,000 tonnes annually to 1 million tonnes will cost Lyttelton Port more than $1 million. The real estate market will also be affected as more people try to sell and leave the region. There are about 250 houses already listed for sale on the West Coast, and they do not command anywhere near the kind of prices in places like Auckland. Jobs of people maintaining the Spring Creek mine are also under threat. So far, the government has resisted calls to support Solid Energy to consider a regional development package. Labour's MP for West Coast Tasman, Damien O'Connor, says many people will be forced to leave Buller District. He says Solid Energy was set up for sale by the national government, squeezed for dividends and didn't anticipate falling coal prices. Mr O'Connor says numerous mistakes have been made at governance and management levels by a company that lost touch with its core mining operations.
NBR Radio with Bayleys, New Zealand's leading commercial real estate company.
And now a warning from the FMA. Regulators are concerned a New Zealand-registered foreign exchange broker may be continuing to solicit money from members of the public. Despite its own admission, it's unable to meet its obligations to clients. The Financial Markets Authority is warning the public against dealing with Forex Trend Limited, understood to be based in Ukraine but operating from an office in Auckland. The online broker, which has also been blacklisted in Russia, still has a live website offering customers accounts for online currency trading. The firm is still licensed by New Zealand's financial services provider and touts its membership of this country's Financial Disputes Resolution, an independent dispute resolution scheme. The FMA issued its warning after receiving a number of complaints from overseas-based Forex Trend customers that the company had failed to follow their instructions to withdraw funds from their accounts. Forex Trends New Zealand Director Min Lei Zhang has told the FMA that the company is unable to meet its obligations and intends to appoint a liquidator. Forex Trends' latest publicly available accounts show it made a small profit of $36,348 for the year to March 2014. It held client funds totalling $632,122 as at March 31st, but cash on hand of $485,261. Auditor Michael Stowers noted the accounts were prepared on a going concern basis that are dependent on continued funding and support of the shareholders. The company's sole shareholder is FX Trend Group, which is based in the British Virgin Islands. Companies are not permitted to carry on business if they become insolvent, the FMA notes in a warning posted on its website. The FMA says, however, the Forex Trend website still offers customer accounts for online currency trading. Despite several requests, the FMA has not received any further information from Forex Trend regarding the proposed appointment of a liquidator. NBR visited Forex Trend's serviced office at 21 Queen Street today, but Mr. Zhang was off work sick, the receptionist said. Earlier this year, CRFIN, Russia's self-regulatory organisation for the foreign exchange industry, blacklisted Forex Trend. And now a business update. The Warehouse is maintaining its dismal annual profit guidance despite reporting a 3.8% jump in third quarter sales from its core Red Shed stores. The Warehouse shares rose 3 cents to $2.77 after the announcement. In March, the retailer forecast annual profit would fall to between $52 to $56 million from $77.8 the previous year. The latest report shows all divisions increased sales in the 3 months ended April 26. The stationery stores lifting 2.9%, Noel Leeming 5.4% and Torpedo 7 up 8.5%. But the 92 Red Shed stores will be the key contributor to the annual result. They accounted for nearly 93% of retailing operating profit in the first half. The latest quarter's sales growth was the 17th successive quarter of growth following 7 years of sales declines. Chief Executive Mark Powell says the Red Shed's gross profit margins improved in the latest quarter after a difficult first half, but that was in line with expectations. But he says the problem with growing profits in recent years hasn't been a margin story. Mr. Powell says the real reason we have not increased profit in the last 4 years has been to do with a catch-up on capital and cost investment. If the company hadn't been making this investment, we would be making less than half of what we're making now. But he admits the company hasn't seen the growth it would have liked to have seen. He says the planned capital spending over the next 3 years should be less than depreciation after significantly exceeding it in the last few years. While Briscoe Group attributed its slowing momentum in sales to the late start of winter, Mr. Powell says it's too early yet to call the winter trend. He highlighted the apparel and leisure categories as showing stronger than average growth in the third quarter and says the exit to summer was particularly good for the Red Sheds.
NBR Radio, it's Friday the 8th and I'm John Stewart. I'm joined by reporter Hamish McNichol, who's been covering a big case in the advertising industry. A man called Anthony John Hendon, aged 54, has been sentenced today in the High Court at Wellington, following an SFO prosecution. So, Hamish, can you tell us anything about Hendon? Do we know who he is?
Not too much, but basically this is the guy that the SFO is calling the lead offender in this long-running magazine advertisement scam, which there's been a few stories about recently. Even yesterday, 2 other defendants were found guilty of 7 charges. So he's been dubbed the lead offender and is said to have managed to scam more than $750,000, and he's been sentenced to 4 years in jail today.
Right. Now, there were 6 arrests altogether. Can you just give us a bit of background to those?
Yeah, so he was one of these 6 arrests, like you said, following a joint enforcement agency operation which was established in May 2012 and led by the Serious Fraud Office. It involved 7 different agencies and 67 staff and was collectively known as Operation Edit. And basically, the scam attempted to obtain more than $1 million from about 1,000 victims.
Right. So how exactly did it work? False invoicing? What?
Basically, they overstated or grossly misrepresented is the term the SFO has used, the number of magazines which advertisements would appear in. So, yeah, I guess you can solicit a lot more money from people if you can say that this is going to appear in X amount of magazines when in fact it's not at all.
Who are the others in this case, and where are they at in the court process?
Well, yesterday, Nolene K. Banton, who's 61, and Johannes Hendrik Maria Middeldorp, who's 63, were both found guilty for their part of the scam, but no convictions have been entered yet. They were facing 7 charges of dishonestly reproducing documents on which they were found guilty, but they were acquitted of 2 other charges. Their sentencing isn't until June 12, at which point convictions will also be entered. And 2 other defendants in this case have already been sentenced to home detention and community work, respectively, after they pleaded guilty earlier.
Hamish, many thanks.
NBR Radio. With Clooney Restaurant now offering Auckland's most exclusive private dining room. NBR Radio.
NBR Radio, it's Friday the 8th. I'm John Stewart. I'm joined from Wellington by our political editor, Rob Hosking, who's having a look at the week that's just been. Now, Rob, we've got John Key back in the House. So what happened in Parliament this week?
Well, that was a bit of a theme of the week was how Key was going to go coming back. He'd been overseas for a couple of weeks with Gallipoli and the trade negotiations in the Middle East. So that was all sort of both the country's most serious centenary ever, really probably, as well as key trade area, and of course most of the coverage has been about ponytails. So. The debate, it was going to be how much is this going to be a focus this week? How much is the opposition going to push him on that stuff? And
it seemed to me like the ponytail thing died a bit of a natural death.
Yeah, it has. I think the thing people are still joking about it, and I think they'll still be joking about it in 18 months' time. I think they'll still be joking about it come the next election, frankly. So it's bubbling away there in the consciousness. It's one of the things. Key is going to be remembered for, I suspect. And one of the questions was he going to come back and do what he's done in the past, which is act what I call the Paul Henry in chief mode, where he basically trolls people and gets he gets a bit sarky, and that has worked quite well for him in the past. Or whether he was a little bit less provocative, and in the end he tried for a little bit less provocative. I think I don't think it was just a performance of being chastened. I think, there was a sense of, time to pull your head in the sunshine.
Yeah. Now,
that's not a bad thing.
Yeah, sorry to interrupt you there, Rob, but the government's swinging into pre-budget mode. I think there were a couple of announcements this week.
Yeah, they were very much in the health area, and there was stuff that was already been flagged, basically, but all governments do this. They sort of come out and say, we're doing this, even though we announced it last year and blah, blah, blah.
Yeah.
So there was a bit of extra money for elective surgery, nice photo opportunities of not only, and this was interesting, not only the health minister, but also Key. Key hasn't involved himself in this sort of promo before on the health area. It's been very much the province of the previous health minister, Tony Ryan. So, I think that was a bit of the fact Key was involved at all is a signal that they feel there's a bit of rowing back needed after the events of the last month or so.
Yeah. Now the flag change bill, hearings have started on that.
Yeah, and it's interesting because this is starting to get people quite worked up, and it really cuts across the boundaries. There is, that what I suppose you would expect. The Return Services Association are making a very strong pitch and saying, listen, our guys died under this flag. It's kind of dishonouring them to change it. There is, on the other hand, there is a feel that the time has really come to have a look at to have a flag that doesn't look quite so much like the Australians. And the example that keeps getting mentioned is Canada and how instantly recognisable their flag is. And there are also, at the same time, it's quite interesting, and I'm wondering if this might scupper the debate, scupper the flag change, actually. You've got a group of people who want to see us go full republic and who are saying we don't want a new flag unless we have a new republic, unless we have a republic as well. Mm. And that's getting a little bit more traction, I think. And I'll lay my own cards on the table here. I'm a default monarchist. I think the current system works, even though it's silly. So you don't change something that works, even if it is a bit daft. But I do think, having a new flag. I mean, I've been fed up with being overseas and being mistaken for being Australian.
Aren't we all? But just to finish this topic, I just read the other day that apparently the Canadians have the maple leaf flag, but they also fly the previous flag on various important ceremonial occasions and so on. So maybe that's an option for us. But I
didn't know they were still doing that. I know they used to.
Well, maybe it's used to.
But they had that old flag that. I can't remember what the other thing was. It was a badge type thing, wasn't it?
Yeah, I think it was. I think it had the Union Jack. But anyway, now just shifting to the opposition, they're pushing budget and economic issues this week.
Yeah, Grant Robertson, who's been a bit all over the show on economic stuff, was really pushing the whole issue of a surplus or not getting a surplus until next year. Instead of this year, and was attempting to turn up Pete on English during question time. The opposition is still running this very strange line that somehow New Zealand shouldn't have run up debt, and also, well, the strangest aspect of it is that they're arguing that government debt is the highest ever, which of course it is in dollar terms. But the reason for that is because a dollar today is worth rather different to what a dollar was in the mid-'80s, which is when we actually peaked, which is when we hit gross debt. I think it was around 87% of GDP, and net debt, I think it was around 67%. We're going to top out around 28% of GDP. And really, any reputable economist will look at debt as a proportion of GDP when you're looking at national level stuff. So really, this is kind of not a particularly good avenue for them to push on. As well as that, there was the job data this week, which employment and unemployment numbers are always very political, and that got a run around this week as well, and that will keep sort of running over the next few weeks, I suspect, as we get closer to the budget.
Okay, well, look, we'll have to leave it there, but thanks very much for that look at the week that was.
NBR Radio. Free to air online with business news you can use.